Our last presentation for this particular segment is called The Various Business Models with an API First Approach Towards Banking. And this will be delivered to us by Saksham Shubham, who's the business head, Southeast Asia, at Decentro Tech. Now, Saksham is a startup enthusiast, mentor, investor with a history of success in the internet e-commerce industry. He was part of the strategic innovations team at Grab, and he's acted as an investor advisor for various startups. So please welcome Saksham.
Thank you so much, Graham. Right. So, thank you so much for that introduction, Graham. So just quickly, just giving you a brief of, what we're going to discuss here today. So we are basically discussing about, the various business models around the API first approach towards banking. And I am here to bring in a more business oriented and more economical view rather than bringing in a tech specific sort of a view. And it's going to be interesting in a lot of ways because what I understand about the API first approach in the industry is that things have been changing largely for the past couple of years, and it's quite interesting to see how it's going to further develop, especially with newer technologies coming in, and obviously with the advancement of crypto across the globe. Um, so yeah, I mean, what we can see here on the screen is is the typical structure that we are talking about. I mean, the typical API banking models that we essentially see in the world today. I mean, when we look at firstly giving you a little bit of um, background about banks. I mean, I think we all know that banks have a banks largely have legacy banks have legacy systems, right, with largely physical hardware, and they were not so interested in kind of making that move or making that change, or maybe they don't have the right technical know-how. Most of the banks have outsourced IT teams, and that really becomes a problem, especially when the governments themselves want a more open banking infrastructure in their countries. And I think from that perspective, things become really interesting, because if there is intent with the government, with the governments rather, to have an open banking infrastructure, and the banks to have a more lenient policy towards data sharing to that extent. And I think what we have seen is banks have largely played a I mean banks have largely played a great role in kind of taking the first step. Of course, I mean, there was a decent bit of a fintech revolution happening since 2011, 2012, but I think it got the best kind of push, especially from the banking side, post 2015, 2016. So what we are essentially looking at is three different types of API banking models. The first one would be open banking. The other one is banking as a service, and the third one being platform banking. Now, open banking and banking as a service is largely kind of confused with each other. But yeah, I think what's happening in open banking is that the end user is largely the fintechs, regulated or unregulated. I mean, there could be fintechs that do not want to apply for a specific license, but they do want a certain use case that only banks can provide. So banks essentially act as a backend to help them get these you know help them get these services. For example, if somebody does not want to get a lending license, but any fintech who doesn't want to get a lending license, or maybe it's too difficult, or maybe it's too uh, difficult from a regulation perspective to get a lending license, it's going to take a decent amount of time. Then it makes sense for a generic fintech to just go to a bank and integrate those lending services through APIs. Now, when we look at banking as a service is essentially the bank opening up all of its APIs to, all of its, potential services across to any or, basically any or every business out there in the world that essentially aspires to build an internal fintech ecosystem, or maybe wants to deliver or maybe wants to just gather, maybe let's say, into incremental revenue to scale their business. So from that perspective, what we feel at Decentro is that at the end of the day, every company is either going to become a fintech or at least behave like a fintech, um, in a small way, or um, in the most slightest of ways, right? um, the third one is platform banking, where essentially what we are looking at is the banks essentially acting as a platform for different services. So for example, we have already seen use cases of banks essentially using e-commerce as a way to directly deliver directly deliver services, and that I think is essentially where the end users become the banks, and obviously they're supported by, let's say, a hyperlocal service, a quick commerce service, or maybe an e-commerce service, or maybe a ticketing service, right? So there are so many services that can actually become a part of the larger banking module. So when we open a banking app, we have these multiple services that we actually can subscribe to or make a transaction to through, right? And essentially banks acts as the platform where all of this is happening. So these are essentially two different ways of looking at how banking, or rather fintech, is going to evolve into the future. And what we at Decentro believe is that banking as a service, which is rather limitless, is the best way to kind of go forward, and kind of assume our position to be as an enabler, right? And when we say that we are an enabler, when we say that we are essentially the middleware between various various um, various services, and that essentially gives us a lot of that essentially gives us a lot of confidence to go into this subject, and maybe explore it even further. um, and I think what's happening is these when we are essentially, so it's how we cater to this business is it's like a two-way street, right? So obviously there are certain APIs that are being built for the banking systems, but the reverse is happening at the same time as well. And essentially that's exactly what we are going to look at a little further. So yeah, so what we are doing here at Decentro is basically that we are taking all these banks, taking all the financial institutions that are there in a country, and we are also taking the government institutions and regulators, for example any credit bureaus or whatever, and we are integrating it within our system. And we have a bunch of then we create a bunch of APIs, obviously, that any company that wants to, let's say do let's say wants to create accounts, or maybe do lending, or maybe want to have virtual cards, especially for their employees, right? We're definitely going to discuss the specific use cases in this sense a little further. But yeah, I mean, this is largely what we do here in our company, and I think that's it really depends on a specific company's vision to kind of take it forward, or maybe to reimagine how an element of fintech is going to look like within their ecosystem. um, so yeah. So yeah, just briefly, just going through, what we essentially are doing at Decentro here. We are, we are facilitating, a lot of payments. We are doing virtual accounts. We are doing payments. We are creating, and obviously, we are creating accounts that can obviously accept deposits and make transactions through it, right? And there's a decent bit of background information management that we are doing on our part. We are creating virtual cards, like I mentioned before, that there are several use cases of these cards coming in. You could essentially create a smaller fintech ecosystem within your organization, and that could be one of the ways that we can look at this. Then of course there is lending, right? And again, I mean, any of these features that I'm talking about is going to be very interesting, especially when we talk about creating smaller ecosystems within an ecosystem, right? So for example, if you're talking about lending can probably have, like, for example, we integrate with HRMSs across we let's say we integrate with an HRMS, right? And I think what's going to be interesting is that somebody can actually go to their HRMS and maybe apply for a micro loan, and that would be a really, really, really interesting interesting point to kind of I mean, I know that while I started my career, I mean, there were several days when we used to run out of cash pretty early on, and it would have been a great help sometimes, just sometimes, to be a little strong on our finances, right? And I think those salary advances or micro loans are a huge segment, especially when we look at Southeast Asia, where we are kind of betting big in the times to come. Yeah. So just a couple of examples here to kind of explain, how we create those ecosystems is, if we imagine an educational institution, right, and a student, registers itself with the institution, right? How we are creating a smaller, ecosystem is that we create the student's virtual account, right? And every transaction that is happening internally between the student and the institution is largely going through that virtual account, right? And rather than the money flowing out from to a different bank and then coming through a different bank, it's within the same ecosystem that is largely supported by just one bank, right? And that is going to be a interesting development because there are no transaction fees involved over there. And largely what we've seen is that there could be a possibility of, let's say, incremental business within that smaller ecosystem as well, right? I'm not saying this could be the priority for larger institutions that are dealing with obviously academics, but I think it could be incremental revenue generator where a lot of these institutions, educational institutions, are essentially looking at generating continuous revenue, or maybe even saving costs, right? I mean, the MDRs or the commission percentages that are charged these days for money transfers, or maybe just to engage a certain activity like paying fees, is seems a little futile, right? Um, Next, I think we want to look at marketplaces, right? And in marketplaces, what happens is, like, for example, let's take Amazon for example. Let's take any other Lazada or maybe Shopee for example, right? I can think of multiple use cases on how how fintech APIs could actually leverage so many business fronts, and can actually operationalize a lot of these moving parts on from a fintech angle, of course. What we are essentially looking at is, let's say, right now what we're talking about here in the slide is a buyer that wants to register. So I'm basically a buyer that registers on the marketplace. So this is just one part of the story. Obviously there are multiple parts of the story that come much later. I'm a buyer, I register with the marketplace, right? Obviously I can be incentivized to get let's say a card, right? Or create a virtual account with, the same bank that the marketplace kind of operates with, right? And obviously thereby largely saving commissions, right? So every marketplace has to have at least, on average, is at this point in time spending close to about 1 to 2.25% in MDRs, right? And this is largely because of, the involvement of credit cards and, premium debit cards. So that's just one point. And when we look at other countries, sorry, beyond Singapore, we see a lot of reliance on cash on delivery, which obviously, even the governments, the companies, everybody wants to change. Um, and yes, so just quickly going through this, gaming industry. Well, this is something. This is that has a lot of potential, to be honest. There are ecosystems being built, and where, I mean, if you look at mobile gaming and the way that it has grown in the past 6-7 years, is just phenomenal, right? And the amount of money that people are spending these days on gaming is just insane, right? And we've seen that increasing in double digits, even triple digits in certain countries. And we see this as an industry where I think a fintech revolution is about to happen, right? There's so much of money, So I mean, a couple of while ago, I mean, I'm sure we must have heard that Activision, got bought by Microsoft, right? And the biggest reason was the kind of revenue it generates from sales within the game, right? And I think what happens here is that the gamer basically registers with the gaming company, right? And of course, we create a virtual account again for the user, and yeah, I mean, again, thereby saving a decent amount of commission percentage. And then obviously we can give them game credits, and it can eventually reflect in the gamer saving account. Now there's a decent bit of apprehension for money leaving the ecosystem in the gaming industry, and that I feel, also I feel, in the gaming industry there's going to be a decent crypto revolution at some point as well. It has not happened yet, but I'm pretty sure that in times to come there will be a decent bit of a crypto revolution, because um, there is a decent use case of alternative money within those games, right? And that's a very interesting concept that the essentially the metaverse is talking about, right? Um, so yeah, of course, I mean, there is another layer of commissions and MDRs that can be saved in this sense. Now quickly skipping to the last slide, is essentially the gig economy platform. I wanted to talk about it a little bit. That's why I kept it towards the end and tried to skip through the rest as quickly as possible. Um, so yeah, I mean, gig economies have been my favorite given my background, um, because I see several use cases in specific to gig economies, right? So if we look at Uber, if we look at Grab, if we look at any other gig economy business that essentially is operating in Singapore and Southeast Asia, what's happening is there are multiple layers, right? So there's a consumer layer, there's a middle layer of the company itself, right? And then there is a layer of vendors, and then there is another tertiary layer of you know vendors to vendors, right? Uh, Suppliers to vendors, or vendors to vendors, right? So what's happening is that let's just take ride hailing as an example, right? Um, how I am looking at ride hailing developing in the future is essentially everything being digital. Right now there's obviously a cash transaction happening. Right now there's a decent bit of digital change happening. But I think what's really interesting, what would be really interesting to kind of see, is that in the future this would start with fintech and probably end with fintech, right? And the way that it will happen is that Grab has already applied for a digibank license, and that's probably going to be the game changer. How I look at the entire ecosystem is like an umbrella on top of all the other services that Grab essentially has. And when I say umbrella, it is essentially going to so let's just think about it for a second, right? I mean, the consumer is going to get their salary. I mean, let's assume, right? Are going to get their salaries in their Grab accounts, Grab, digital bank accounts, and from there, their spending on Grab will essentially be, free of transaction costs, right? So no MDRs, no transaction costs, no intermediaries in between, right? So there won't be any card charges, right? MDRs charged. And yeah, I mean, it's just pretty much going to be a pretty interesting prospect that way. Um, when we look at the lower end of the spectrum, right? What we're looking at is essentially the merchants who are in turn getting paid once you, let's say, you order food delivery, and the restaurant that is actually cooking it, right, gets the money in their account. Obviously, they have multiple vendors to kind of pay. So an enterprise setup for those guys to essentially pay as you go, sort of a thing, would be really interesting. Now, I was talking about ride hailing a while back. Just quickly touching one point over there is that how many of us have actually wanted to so I think in a lot of places, like I'm pretty sure like people have traveled across Southeast Asia, and um, cash or the expectation of cash, right, from the drivers is like a thing in itself. And I think the reason that is because we are not essentially looking at daily settlements. We're not essentially looking at real time settlements to that extent, and we've not gotten that far even in the gig economy platform, right? And I think that would be something really interesting to kind of see how that develops over a period of time. So yeah, so that was largely my presentation. Now, definitely open for questions.
Excellent. Thank you very much, Saksham. That last point you were making about cash, that's a pretty interesting one. How do you see us overcoming that kind of reliance on cash? Do you think that's more in the gig economy sense? Do you think that's more at the provider end, like the driver, or is it a technical problem? What do you think?
So I think the touch and feel of it, Graham. To be honest, I think what's happening is that consumers just can't let go of the touch and feel of money, right? Cash being in their pockets is something that gives them an immense sense of security. And what we essentially want to change is the fact that, like, for example, like me, I have not been carrying cash since the past 4 or 5 years, and I've been living like that. I mean, basic amount of cash, like. So I think that kind of reliance on digital front needs to be there, because I know for a fact that my backup is an ATM, which probably would just be a kilometer or two away, right? So I'm coming from that mindset. However, for people to kind of change, this is a behavioral change, right? And it will not happen so soon. It is going to take its own sweet time. When we talk about the gig economy, there's a decent amount of cash acceptance because there is no real alternative to that, right? We haven't really worked too far into the fintech applications into the gig economy, right? Right now, it has only been about customer acquisition. It's only been about retention of the customer. It's only been about monetizing the platform. It has not been about how can we make the lives better, and how can we essentially integrate fintech into the larger universe that we are trying to create. It's not been about saving a couple of 100 basis points, 200 basis points on MDRs. It's largely been about how can we increase the consumer base to another 10-20% year on year. So I think the focus needs to kind of change, and a team needs to be set up to kind of pick this up and take this to the next level. Yeah.
Okay, great. Yeah, I know here in Australia, which is where I am, I haven't carried cash for, gosh, I can't remember since when.
Sure.
It's is it something that changes a bit from country to country? Do you think there's
Right.
more of a national feeling for cash or something?
No, definitely. I think in more developed countries, like for example, in Singapore, right? I essentially don't even need to carry my phone these days, right? So my Apple Watch just does the job, or my phone does just does the job. So basically, what we're doing is that we're stepping up every year, so to say, right? So there's something or the other which is coming out, which is new in terms of technology, and I think. The reliance on technology is really what's taking us that extra step. We are taking that extra step because we are becoming more and more dependent and reliant on technology. And I think technology is the one that is essentially going to change. So the moment the digital economy in every country across Southeast Asia kind of increases, I believe that this change is actually going to happen pretty soon. So the urban economy in obviously Singapore, Australia, and all the other locations, all the other developed locations, is definitely going to be at the forefront. But yeah, I think in across Southeast Asia, it's probably going to take another 5-6 years to get there.
Okay, great. Well, thank you very much, Saksham. That's fantastic.
Thank you so much,
Thanks for
Graham.
being here.